Greetings, members, one and all of the Salivation Nation. Gold and silver get crushed for yet a second day. Let's explore! That's right, what you're looking at here is yesterday's close. Now let's take a look at today's close of the prices and the drop of gold and silver to a whole new level. Boom! Shalaka boom. Now look at that. Gold has dropped $38.90. That was $40. In fact, I think it did get over a $40 drop. That's a 2% decline. But look at silver, folks. As is the case, it's almost like clockwork. Silver takes a bigger hit. And this is what I've been warning about all through this big up climb and uptick in precious metals. And so silver's taken a pretty big hit here, showing its volatility in these markets. Therefore, what's happening? Well, the gold to silver ratio has now climbed up above 80. It's 81.78 right now. You may remember when it narrowed down to just right around 70. Below 70 for a very brief amount of time. But here we are. The ratio has widened. Now, I only say that to put things into perspective here. As we look at these precious metals, especially considering what's going on in the economy. And we're going to take a look at this article from MarketWatch, almost a repeat of yesterday. Dow closes down over 500 points, just as it did yesterday. As the tech sector slides, Apple falls. That's the bulletin here. Now let's take a look at here. Gold prices end at a 2-month low as a rise in U.S. dollar deflates bullion demand. There's another thing. We can almost bet the bank. Although there are exceptions, and notable exceptions, where the dollar strength is directly related to gold and silver prices. And so gold prices on Wednesday fell below $1,900 an ounce, a psychologically important round number to mark their lowest finish in 2 months as a strengthening dollar continued to undercut appetite for bullion, risking a further break in a bullish trend line in the precious commodity. A rallying U.S. dollar index recently in a rebound in global stock markets at midweek are bearish elements for the precious metals markets, wrote Jim Wyckoff, who is a senior analyst at Kitco.com. Silver has seen its near-term price uptrend negated this week, and gold is in serious danger of seeing its near-term uptrend ending, the Kitco analyst wrote. December gold fell $39.20, or nearly 2.1%, to settle on $1,868.40, deepening its march to its late July lows after posting losses in the previous 2 sessions. This was the lowest finish for a most active contract since the 22nd of July, according to FactSet data. December silver fell 6.78%, tumbled $1.42 or 5.8% to end at $23.10 an ounce, which was also the lowest settlement since late July. And precious metal prices have been under selling pressure since the start of the week as rising cases of COVID-19 in Europe and in the U.S. helped to fuel an unwind of profitable bets on gold and silver and into dollars, a shift that further weighed on gold buying. So there you go, and that's just it. People are going to the safest assets they can think. Well, the dollar really is, and considering its role and its strength is harbored up here. Now, people mistake the strength of the dollar for what its exchange is. In other words, compared to other currencies. For instance, the pound and even the euro, through much of this time, has a higher exchange rate or lower exchange rate. In other words, it takes more dollars to equal a pound than vice versa. And that is usually the case. But the strength is a different measure. It's where people put their faith. And that's really what the bottom line is. And inflation is happening really around the world with all these currencies, but nonetheless, the dollar strength is gaining here in this present crisis, or this subset of a crisis, this little cog in the wheel, so to speak. The dollar was up 0.2% on Wednesday, looking at a weekly gain of 1.3% based off the ICE US dollar index, 0.40%, a measure of the buck against a half dozen currencies. The stronger dollar is pressuring gold, as is the lack of any stimulus package coming out of Washington. But we think the complex is oversold both fundamentally and technically, as we would not go short here, Edward Meir, analyst at ED&F Man Capital Markets, wrote in a note Wednesday. Chicago Federal Reserve President Charles Evans on Tuesday implied in a speech that the Fed could lift benchmark interest rates, which currently stand at a range between 0 and 0.25% sooner than the market expects. Higher rates may boost the dollar and make gold less competitive against interest-bearing markets. Just the mere mention of that they could. But still, it's highly unlikely, I think, at this point, especially if there's not a package coming from Congress anytime soon. It's looking less likely as the days go by that that's going to happen. They've averted a shutdown through a temporary measure that they've discussed today, and that may have also boosted the dollar's strength, and that they're not going to have a government shutdown. We could start raising rates before we start averaging 2%. We need to discuss that, said Evans, during a discussion sponsored by OMFIF, an international forum for economic policy. An analyst said that seems at odds with what other Fed officials have been following the central bank's lost policy statement. But Evans on Wednesday said he felt the remarks were in line with the September policy statement, and that market participants should understand that a 2.5% inflation rate for some period is likely in the cards. That's the magic number that you've heard me talk about before, that they're okay with that extra half a point percentage rate there, if the central bank is doing its job right. Fed Vice Chairman Richard Clarida, in an interview with Bloomberg Television Wednesday, said that even when inflation hits the 2% target, the central bank won't automatically raise rates. Some comments from central bank officials were contradictory. Boston Fed President Eric Rosengren said Wednesday that he is less optimistic about the economic outlook than many of his colleagues, despite encouraging economic data over the summer. Fed Vice Chairman Randall Quarles, meanwhile, was optimistic about the U.S. economic outlook. I think they're probably both right. There is certainly, by some measures of the economy, housing, CPI, and other factors, employment recovery, show some promising signs. But there's other factors like debt, deficit spending, GDP, and other things that are weighing against this. So we'll see how it plays out. Federal Reserve Chairman Jerome Powell was testifying Wednesday before the House Select Subcommittee on the coronavirus crisis after providing congressional testimony a day earlier, saying that he's cautiously optimistic about the economy. And gold prices Wednesday fell further following the release of the latest U.S. economic data Wednesday. The IHS Market Flash Services PMI slipped to 54.6 in September from 55 the prior month, while the IHS Market Flash U.S. Manufacturing PMI climbed to 53.5 in September from 53.1 in August. Meanwhile, global stocks moved mostly higher on Wednesday, but equities have been choppy, with the S&P down over 2 points on Monday, narrowly avoiding a close in correction territory, defined as a retreat of 10% from the recent high. U.S. benchmark stock indexes fell Wednesday. Gold and silver bulls are confounded this week, Wyckoff said. Their markets sold off along with the global stock markets on Monday, but then also seeing selling pressures in midweek when the world stock indexes are rebounding. It appears the safe haven metals need a new fundamental spark to jumpstart upside price action. Don't be surprised if such occurs sooner rather than later. I actually agree with that wholeheartedly. Now, I don't want to be the guy. Let's refresh these markets again because we're looking at these real prices here. 1860, $1,860 for gold, silver under $23 right now. Platinum is down 31 bucks. These are buying opportunities, but I don't want to be that guy. I don't want to be that channel that says that, hey, when the prices are up, hey, we've been validated. Although, in a way, we can say that to some point, only because it's reacting to economic instability. Well, part of that instability is good news and psychological levels that can push these prices down too. And I think that's what we're seeing today. So that is a buying opportunity. However, sometimes, even when the prices are low, you should not buy. And you've heard me talk about that relatively consistently. Although I do understand the opportunity to buy, because especially if analysts feel like the prices could go up. But whenever you buy, no matter what price it is, even with these lows, they could go lower. I made a purchase yesterday, and what I thought was relatively close to the bottom of the dip. I wasn't at the bottom, but I was close to the bottom of yesterday's dip. Well, it took an even bigger hit today. I'm kicking myself for not buying today, but no one really knows. You buy with the understanding that it could always go lower. I mean, shoot, when silver was trading at $27, I thought, well, you know what? It's probably unlikely that it's going to go below 25 or 24. Look at there. We're in the 22s right now. It could go below 20 if the economy recovers and we get things going, this vaccine, and people feel, or the market feels good about it. I'm not talking about you and me. I know I'm not going to be jumping on the bandwagon to get this vaccine, even when it becomes available to the general public. Heck, I don't take the flu vaccine. I have a fear of these types of things. But anyways, this is something that we should keep in mind whenever making a purchase, whether it's in the ETFs, in the electronic markets, or in the physical. You always buy with the I'll put it to you this way: never buy anything that you don't understand. Part of understanding that what you buy is understanding price fluctuations, even on safe haven assets such as gold and silver. And they're taking a hit. Yes, indeed, they have today. They're down, but they're not out. They will never be out. So keep that in mind too. That's why I'm not necessarily a proponent in selling either, unless you need to sell. Or if you have the luxury to sell and be able to take profits and use that money wisely. You know what I mean? I mean, in other words, I don't think I would sell precious metals to go buy a new car, for instance. But I would take precious metals, maybe take profits, maybe to help pay down the house or pay some bills that are needed, or to apply to precious metals again when the prices take a dip. And as is usually the case, whenever there's a big fluctuation in these prices and they go way high, some may even feel artificially high, you take profits and then you buy again. But you got to keep in mind what your profits are when you do sell as well, because you have to take into account the premiums you paid for the silver when it was low, or gold. So those are just some things to consider, which is why I've always been somewhat cautionary in my approach to the movement of these prices. It's exciting in some ways as a buyer, or as to validation that you're doing the right thing and holding these precious metals, but it can also be frustrating. So there you go. That's the news of the day. I hope you enjoyed this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.